Hello friends, I'm Ruslan and the INFAPORTFINANCE channel. Let's talk today about the importance of saving money. We all know that. It's the foundation of financial security. But let's face it, it's not always easy. Hello friends, I'm Ruslan and the INFAPORTFINANCE channel. Let's talk today about the importance of saving money. We all know that. It's the foundation of financial security. Life throws surprises, unexpected expenses pop up, and sometimes it seems like there just isn't enough money to save. Saving doesn't mean having tons of extra money. It's about managing the money you have wisely. It's about finding ways to make your money work for you. And that's where choosing the right savings account comes to the rescue. You see, not all savings accounts are the same. Some offer paltry interest rates that barely keep up with inflation. Others charge hidden fees that eat up your hard-earned savings. You need an account that fits your financial goals, an account that will help you grow your money safely and effectively. That's what this guide is about. We're going to detail everything you need to know about savings accounts. We'll look at the different types of accounts available, from traditional savings accounts to high-yield options and online banks. We're going to dive into the world of interest rates, show you how to maximize your profits, and don't let yourself be fooled. But it's not just about numbers. We'll also look at often overlooked aspects of savings accounts, such as fees, minimum balance requirements, and availability of funds. We will arm you with the knowledge you need to make informed decisions that meet your individual needs and financial goals. By the time you finish reading this guide, you'll be a savings account professional. You'll know how to choose the right account for you and how to avoid costly mistakes, and how to make your money work more efficiently than ever before. So let's get started. Let's start with a good old-fashioned traditional savings account. These are the accounts you probably envision when you think of a savings account. Offered by most banks with physical branches, they are as familiar as your local grocery store. Traditional savings accounts are easy to open. You can usually walk into a branch, talk to a bank representative, and walk out with an active account in less than an hour. They are usually easy to understand as well. You deposit your money, earn a small amount of interest, and can withdraw your funds when you need to. Simple, isn't it? But here's the catch: traditional savings accounts are notorious for their low interest rates. High-yield savings accounts. Don't settle for pennies when you can make dollars. This is the motto of high-yield savings accounts. These accounts are like the cool cousins of traditional savings accounts. They offer much higher interest rates, which means your money grows much faster. High-yield savings accounts are often offered by online banks or credit unions, but don't let that scare you. Online financial institutions are as safe and secure as their traditional counterparts. In fact, they often have lower overhead costs, allowing them to offer their customers more favorable interest rates. Now, for the drawbacks: high-yield savings accounts may have slightly higher minimum balance requirements than traditional savings accounts. Online savings accounts. In today's digital age, everything is moving online, and banking is no exception. Online savings accounts are rapidly taking over the financial world, and for good reason. They offer a level of convenience and flexibility that traditional banks can only dream of. With online savings accounts, you can manage your money from anywhere in the world, 24 hours a day, 7 days a week. No more standing in line at the bank or rushing to get there before closing time. Just log into your account from your computer or smartphone and you're all set. But the convenience doesn't end there. Online banks often have convenient mobile apps that make managing your finances simple. You can check your balance, transfer funds, deposit checks, and even pay bills, all with a few taps on your phone. The power of compound interest. So, let's talk about interest rates. That's where the real savings magic happens. Interest is the money the bank pays you for letting them use your money. Think of it as a little bonus for being responsible with your finances. And now the most interesting thing: interest can be capitalized. Capitalization is like earning interest on interest. This is a snowball effect that can increase your savings very quickly. Let's say you have $1,000 in a savings account that earns 2% annual interest. In a year, you'll earn $20 of interest. but after 2 years, you'll earn a little over $40 because you get interest on the original $1,000 plus the $20 of interest earned last year. Finding the best bets. Do you understand how it works? The longer your money stays invested, the stronger the compound interest effect becomes. That's why it's so important to find a savings account with a competitive interest rate. Even a small difference in interest rates can turn into a lot of money over time. So, how do you find the best bets? Well, it's easier than you think. There are many websites and apps that allow you to compare savings account rates at different banks and credit unions. All you have to do is enter a few details, such as your zip code and the amount you want to deposit, and voila. You will have a list of options to choose from. Don't fall for introductory sentences. Now, a word of caution. Don't fall for introductory sentences. Some banks offer tempting rates for a short period, such as 6 months or a year, to attract new customers. But once that period ends, the rate often drops dramatically, leaving you with not the best returns. Look for accounts that offer consistently competitive rates over the long term. Remember that you are playing the long game, not just looking for a quick fix. Take the time to compare rates at different institutions, read the fine print, and choose an account that fits your financial goals. The insidious truth about commissions. We've talked a lot about interest rates, and for good reason. Getting a solid return on your savings is crucial. But here's the thing. Commissions can eat up your income faster than a pack of hungry dogs. Quite right. Those pesky little fees that banks like to hide in the fine print can seriously undermine your savings goals. The worst part is that many people don't even realize they are paying these fees until it's too late. They look at their account balance, see a smaller amount than they expected, and think it's just the cruel hand of inflation. But these are often hidden fees, slowly draining your account like a leaky faucet. Don't let this happen to you. Knowledge is power, and understanding the different types of fees charged by banks is the first step to protecting your hard-earned money. Common commissions to watch out for. So let's shed some light on some of the most common fees lurking in the shadows of savings accounts. Monthly account maintenance fees are like a monthly subscription fee on your account. Banks charge them simply for having your account open, whether you use it or not. That's what I call a spit in the soul. Some banks waive these fees if you maintain a minimum balance or make a certain number of transactions each month. ATM withdrawal fees can quickly escalate if you're not careful. Using an ATM outside of your bank's network can cost you a couple dollars at a time, and these fees can seriously hurt your budget if you use ATMs frequently. An overdraft fee is a penalty for spending more money than you have in your account. These fees can be very high, often around $30 per overdraft, and they can quickly turn a minor financial hiccup into a major headache. How to avoid the frustrations associated with commissions. An inactivity fee is like a penalty for keeping your money in one place for too long. Banks may charge these fees if you don't make any deposits or withdrawals for a certain period of time. It's like they are encouraging you to spend money instead of saving it. Paper statement fees are a relic of the past, but some banks still charge them. If you care about the environment and want to save a few trees and a few dollars, opt for electronic statements. The good news is that avoiding these fees is often easier than you think. Many banks offer free checking and savings accounts, especially online banks and credit unions. Before opening an account, take a few minutes to read the fine print and understand the fee structure. Ask questions, compare options, and don't be afraid to negotiate with the bank. Remember, you are the customer, and you have the right to choose an account that fits your financial goals. Your money when you need it. When it comes to your hard-earned savings, affordability is key. It's great to have your money safely stored, earning interest and growing over time. But what happens when you need to access these funds quickly? Life is full of surprises, and sometimes those surprises come at a cost. Maybe your car breaks down, your roof starts leaking, or you have an unforeseen medical expense. Whatever the reason, there are times when you need to tap into your savings without jumping through hoops or paying exorbitant fees. That's why it's so important to choose a savings account that gives you easy access to your money when you need it most. The problem of withdrawal limits. Now, not all savings accounts are equally good in this regard. Some accounts have strict withdrawal limits that can leave you broke when you need cash in a hurry. For example, some banks limit the number of withdrawals you can make per month or per reporting period. Exceed this limit, and you may be charged excessive withdrawal fees. Now that's what I call spitting in your soul when you're already dealing with unforeseen expenses. Other accounts may have waiting periods for withdrawals, meaning you need to request funds a few days in advance. While this may not be a problem for planned expenses, it can be a serious problem if you need money urgently. Finding the right balance. So, how do you find the right balance between getting a decent return on your savings and accessing your funds when you need them? It's all about finding an account that fits your individual needs and financial goals. If you're saving for a specific goal in the distant future, such as retirement or a child's college education, you may not need immediate access to all your funds. In this case, you may want to consider a high-yield savings account or certificate of deposit that offers a higher interest rate, but may have some restrictions on withdrawals. However, if you are building an emergency fund or saving for a short-term goal, like a down payment on a house or a new car, you'll need an account with easy access to your funds. Look for accounts that offer unlimited withdrawals or have minimal restrictions. Balancing lows. We looked at interest rates, fees, and availability. Now let's talk about another important factor to consider when choosing a savings account: the minimum balance requirements. These requirements can be a two-pronged stick. On the one hand, they can incentivize you to save more. Knowing that you must maintain a certain balance will motivate you to make regular deposits and avoid unnecessary spending from your savings. It's like having a little financial angel on your shoulder that nudges you to make responsible decisions. On the other hand, minimum balance requirements can be an obstacle for some savers, especially those who are just starting to save or are on a tight budget. So how do you know which minimum balance requirement is right for you? It's all about evaluating your financial situation and savings goals. If you are confident that you can easily maintain a higher balance, you may qualify for a high-yield savings account or money market account that usually offer more favorable interest rates. These accounts are a great option for putting your emergency fund or saving for a down payment on a home. However, if you are just starting to save or are working with a limited budget, there are many savings accounts with low or no minimum balance requirements. These accounts may not offer the highest interest rates, but they provide a safe and affordable place to store your money and make a little extra profit. Remember, it's always better to save at least something than nothing. Let's say you found an account with a minimum balance requirement that you really like, but you're not quite sure you can maintain that balance on a consistent basis. Don't panic. There are several strategies you can use to avoid those pesky commissions. First, consider setting up automatic transfers from your checking account to your savings account each month. This way, you will be constantly adding to your savings without even thinking about it. It's like paying yourself first. Second, look for banks that offer combined balance options. This means you can link your savings account to another account, such as a checking or money market account, and the total balance in both accounts will count toward meeting the minimum requirement. Minimum balance requirements are just one piece of the puzzle when choosing a savings account, but it's an important element nonetheless. By understanding how these requirements work, carefully weighing your options, and employing a few smart strategies, you can find an account that will help you meet your savings goals without going broke. Remember, the best savings account for you is the one that fits your individual needs and helps you get the most out of your hard-earned money. So research the information, ask questions, and make the right choice. When it comes to your hard-earned money, safety should be a top priority. You work too hard to have your savings wiped out by something beyond your control. That's where deposit insurance comes to the rescue. Think of deposit insurance as a safety net for your money. It's a guarantee that your deposits are protected, even if the unthinkable happens and your bank or credit union collapses. You're probably thinking, bank failures? That doesn't happen anymore, does it? While it's true that bank failures are relatively rare, especially in today's economy, nevertheless, it can't be said that they don't happen. And when they happen, The consequences for depositors can be catastrophic. Deposit insurance gives you peace of mind, knowing that your money is safe, no matter what economic storms come your way. In Russia, deposit insurance is provided by the Deposit Insurance Agency, or DIA. The DIA is an independent agency of the federal government and has a long track record of protecting depositors' funds. Here's how it works. DIA insures deposits up to, at the time this translation was created, please check for up-to-date information, per depositor in one bank. This means that if you have $15,000 or less on deposit at an insured bank, your money is fully protected. If you have more than $15,000 in deposits, you may want to consider spreading your money across several insured institutions to ensure that all of your funds are insured. Coverage for different types of accounts. By now you're probably wondering what types of accounts are covered by deposit insurance. The good news is that most deposit accounts are covered by insurance, including checking accounts, savings accounts, money market accounts, certificates of deposit and pension accounts opened with insured institutions. However, it is important to note that deposit insurance does not cover investments such as stocks, bonds, or mutual funds, even if you purchase these investments through your bank or credit union. Investments are subject to market risk, and their value may fluctuate. Ensuring your savings are protected. Before opening a savings account, it is critical to make sure that the institution is insured by the DIA. You can usually find this information on the bank or credit union's website, or contact them directly to confirm. When you see the DIA logo on a bank or credit union, it's a sign that your deposits are protected. It is a symbol of safety and security in an often unstable world. So, as you embark on your savings journey, remember that choosing a safe and secure institution is just as important as finding the best interest rates and avoiding fees. By taking the time to understand deposit insurance, you can rest assured that your money is in safe hands, which will allow you to focus on what's most important: achieving your financial goals. The power of conscious accumulation. That's it. In this guide, we've covered a variety of topics, from the different types of savings accounts to the importance of interest rates, fees, affordability, minimum balance requirements, and deposit insurance. It may seem like too much information, but the important thing is this. Not all savings accounts are the same. The account that fits your neighbor, your coworker, or that financial guru on social media may not fit you, and that's okay. The power of conscious saving lies in understanding your individual needs, financial goals, and tolerance for risk. It's about researching information, asking questions, and choosing an account that fits your unique circumstances. Take control of your financial future. Remember, a savings account is not just a place to store cash. It's a tool that can help you realize your financial dreams. Whether it's buying a home, retiring comfortably, or just the peace of mind of knowing that you are prepared for all of life's adversities. Don't let your money lie idle, slowly losing value due to inflation. Make them work for you by choosing a savings account that will help you maximize your returns, keeping your funds safe and accessible. Take control of your financial future today. Start by analyzing your current savings strategy, exploring available options, and making informed decisions that will lead you to success. Today we've covered how to choose the right savings account for you. The main thing to remember is that your money should work for you, not just lie in an account. Don't put off for tomorrow what you can do today. Start saving and investing now. Subscribe to the INFAPORTFINANCE channel, give us a like if you found this video useful, and don't forget to click on the bell so you don't miss our new episodes. Share your comments and questions. We always welcome your feedback. Thank you for being with us. See you again, friends.